Good day, everyone, and welcome to session recap. Well, as you know, I was on holidays and now I'm back in business. So here I am again. We will have our standard session recaps on Monday and live trading webinars on Wednesday each time. And of course on Thursday and maybe other days, we will have standard educational webinars regarding cryptocurrencies and all important and hot stuff that we can make money from. So at this point, guys, I want you to know that I really had a great holiday, and it was a bit, maybe it was a bit short, but it was effective. And when people ask me why you take holidays that short, why don't you stay longer? My answer is I simply can't take any longer holidays because I enjoy working this. The only problem, and maybe I'm in a big minority, but I really enjoy being here, working with you all, and because of that, I also did some trades over the holiday. I made some small money, like 250 euros, I think, but it was nice because I didn't pay a lot of attention to screen. I did it from the beach, from the sun. So it was easy, easy trading. Just few glance at charts with very low risk. So it's a bit nice when you can trade wherever you are from, and then, well, even 250 euros. It's small money, but it was still okay, just for the sake of charts. I know. A lot of people ask me, you should not trade when you're on holiday, but it was like just few trades, and that was all. Not much. Okay, so yeah. Okay, so as you can see, I'm back in business, and now we will start with our session recap. Uh, you can always ask me. I just watched the charts few times, paid attention to NFP. Nothing major basically happened, except that even August was good to trade. So on my bigger account, I made some 2% ROI in August. So it was okay month. I know a lot of people stay away and they don't trade during August, but still, I think it was a good month to trade. And you can always trade, as I said, guys. I mean, just lower your targets, lower your risk, go with the 20-30% of ATR, and you should be fine. In fact, in a week time, I think I will publish a new blog about holiday trading, so you will be able to read it, of course. And yes, guys, thank you for your great wishes, for welcome back, and everything is great. I see a lot of comments. Thanks everyone, Pep, Roberto, Brian, Marco, Carmen, everyone. And of course, now we will start with session recap. And I prepared a lot of setups for you. And I hope that we will also make money this season, because for me, season always starts in September. So from September till August, that is a new trading season. Then the trading season usually finishes around August. Then in September, new trading season starts. So this is the start of new trading season. Of course, because we can also trade cryptocurrencies, I expect, and you can also expect, live trading on cryptos and analysis. I think from October or mid-October, I will start doing that. I feel pretty much comfortable with cryptos too. So, I mean, whatever market throws at me, I can deal with it. So even cryptos, and I think it will be good. So let's continue with a session recap. As always, before we start, quick disclaimer explaining that CFD and Forex trading are leveraged products, and of course, trading involves risk. You should always be aware of all risks associated with Forex trading. So please read the full risk disclosure. And guys, whatever they say, I will always tell you the truth. If you stick to good money management, you should be able to really to be profitable. just follow these analysis, live webinars, and so on, and you should be fine. And of course, do low risk trades. That way you will ensure longevity in Forex market. Patience is always the key to trading success. And that is what I have learned over the course of my career. Always try to be patient, guys, okay? Always, okay? And wait for the market to come to you. That is extremely important, guys. Wait for the market to come to you. Don't chase it. Rules and setups for our session recap. Give price a breathing room always. Do not wait for a single pip in the zone. Try to enter a little bit earlier or when the price is within the zone, and do not chase the price. I need to repeat it a lot of times because that is what traders, that is the time when traders start to lose. When you try to chase the price because you think that market actually run away from you, then you will start. That is the first step towards your losses. Enter within 15 pips of the predicted level if it's in agreement with your system. This is what I trade. I trade zones on my Camarilla MACD method. I created it. So basically, I prefer to use the zone, and zones are extremely important. Use scaling in if you wish. You do your own trade and money management. I give you entries. I give you the analysis. But what will you do when once you are in a profit or when you're in trade? That is, of course, up to you. Brian is saying there is no sound. Brian, sound should be fine. Please restart, I will say, okay. So sound, yeah, sound is okay. I can see here on the screen. Yeah, Bob is confirming sound good. Yeah, thank you, guys. Indeed, Reg, sound is good. Yeah, okay. Also, guys, add a spread to your stop loss. It's extremely important if you have spreads to add it to your stop loss. Even if you trade via ECN, try to add 2 to 5 pip spread depending on pair traded. Yeah, Brian is saying the sound is okay now. No problem, Brian. I'm glad you have the sound back. So my rule of thumb is, even though if I use and I have the ECN account, I always add 2 to 5 pip really to my stop loss. We take only one position per listed pair, so it's either positional or alternative trade, whichever hits first. Have in mind that the first touch of the zone is the most profitable. That is why we need to focus on the first touch. Positional trades are trend trades, okay? Alternative trades are counter trend trades. Breakout trades and scalp trade levels, you can trade independently of any position. So if you are in a position that I gave you, like a positional or alternative trade, it means a trend or counter trend trade, you can also take breakout trade and scalp setup. Also know that session recap trades are valid from Monday to Wednesday, but live trading webinars that we do on Wednesday are valid from Wednesday till Friday. Okay. Also, scalp trades should be done at or very close to important support resistance levels, and all those levels are calculated by historical levels and Camarilla. Add these levels to your system and pay attention to trends so you might find other trend-based entries. Okay. Pips pool is the maximum available number of pips you could have got on recap entries. Okay. So that is very important. Okay, so let's see, because we didn't trade previous week, I will start immediately with this week's setups. And of course, still a lot of people are joining this ongoing webinar, and I see a lot of welcome back messages. Thank you, everyone. And really, I appreciate you Really, I appreciate every one of you. Really, you come always in good numbers, so I'm very glad for that, and I'm enjoying. The bigger the number, the better it is. Uh, and I always see good numbers here on these webinars. Justina is asking, what is ECN? ECN, in short, is, I will try to explain in the most simplistic way. The ECN account is the lowest the lowest spread account what you can get. I mean, the thing is, it's basically when you trade with ECN, you have 0.1 to 0.5 to 2 pip spread the most, but usually ECN account is restricted to Forex only, and you can have like XAU gold or something like that, because you can trade usually only Forex with that. On other accounts, such as Admiral Market Standard account, you can trade with slightly higher spreads. You can trade Forex, commodities, cryptos, and of course, stocks and indices or equities. So basically with ECN, you're restricted to Forex, but you will have lower spreads, while on other type of the account, you will have not just Forex, but slightly higher spreads. When I trade Forex, I do it usually via ECN, but I also do with my other account that is not strictly ECN, but mostly I'm focused on ECN just for Forex trading. In short, yeah. So, yeah, guys, I was telling you that euro dollar today is going to go up. And now the Ignacio is asking, according to your setup on Admiral Markets website, should we open a buy market order on euro dollar now? The thing is, I would say yes, but the only problem is it's the end of day. So I don't think that market will move a lot during the remainder of this day. So you can see here, this is my analysis on euro dollar, and I predicted a bit accurately that euro dollar will go up. Here, this is still the POC zone. So guys, what I can say is euro dollar can still go, you know, it could retrace from this spot just because it's end of day. So if we were in a normal trading situation, like it's London, early London session, or it's early New York London overlap, I would say yes, you can go long from 1.1900. I think it should go up, but you need to account a possible retrace, because now we will have it's the end of London session, and New York session will also last for a couple of more hours, right? So, you know, there could be a retrace because we are not in a major trading session. You need to think about everything, guys. You cannot, now I'm talking also to people who haven't traded with me, but they watch the webinar on YouTube channel. When you trade, it's also important that you trade major sessions, okay? And yes, Martin, you're right. It's also Labor trading day, so US is on holiday. It's the fact. So what it can happen is basically a retrace. You know, guys, usually market retraces. If it's in uptrend, buyers are here, and here at the POC zones, markets buyers are stronger than here at 1.1900. I mean, you see here on the left, we already have historical buying. So these are historical buyers here. This is not a pure order block, but it's still some sort of mini order block, bullish. And here you can see from this spot and from 1900, we already see historical buyers, right? So in the history, price already rejected from 1900 here. See? So what it can happen is that market goes straight from this spot towards upper levels, or it can reject and then new buyers should appear here. Muhammad is saying it will only move if North Korea fires again. Yes, I mean, that's the risk. So market will always move on risk events. If you remember yesterday, I told you that it should be a gap on euro dollar and possibly on Swiss and yen. That is because of risk flows into euro, Swiss and yen. So basically we had a gap on euro dollar that has not been closed as of yet. Here, this rectangle or quadrant shows you a retail gap. So what can happen is when Asian traders join later, they might close the gap. And if gap closes, then the POC zone will become valid. So that is your decision. As I said, it could go up from this point, but I don't know because we have a Labor Day in US. It's a slow day. It's end of day now, and we have a retail gap that hasn't been closed yet. So, you know, it's double risk. So it will either go straight from 1900 or it will retrace, and it should go from this spot because this is the POC zone. Yeah, I mean, there is a lot of politics, guys. Now, Sander is saying that North Korea actually borrowed money from China to fire the missile. If it has to fire again, it has to apply for a fresh loan from China. I mean, there is a lot of politics. North Korea versus US problem. Really, it really lost, and it has been a big problem for many years. And still, you need to know that China major trade partner is North Korea, and also US the major trade partner is still China. So China is, you know, it's a difficult situation. But you know, it's a bit, it's like it's politics. So we can do nothing. The only thing that we can do here is watch what happens with the crisis and tensions, and at least as traders we can exploit the move. And as traders, we should be able to capitalize on whatever happens. I know a lot of people will tell me, Nenad, it's not ethical, right? If something happens, it's not ethical to make profits from it. But, you know, guys, I mean, it's not ethical to make money on Greece, right? And we made money on Greece. It was not ethical to make money maybe from Brexit in some way. It's not the same, but you know, it's like it was a problem for UK, and it was like a, you know, it was like a big event, and we also made money on Brexit. I need to remind you, you know, what happened with Greece, what happened with Euro, Swissy, with when Swiss National Bank dropped the floor. Well, you know, it was not ethical, but it depends. If you are a trader, you want to capitalize on whatever you can. Why not? I mean, you trade the market. This is what we do, right? And we are putting our own money at risk. So basically, we can also lose. It's not like we are winning always. So I think it's perfectly fine to try to trade during North Korea versus US crisis. And I advise you to trade. Why not? I traded and you trade with me together. So why not? Yeah, it's BRICS summit in China, and I hope that everything will be fine and that nothing major will happen. These sporadic skirmishes that hurt no one are, well, okay, but I hope that no one will get hurt and that markets will do their own thing. So let's get back to euro dollar. As you can see, euro dollar is in uptrend, and you can read a full analysis here, course on Alvin Market's website as always. And this is the setup for this week. So I hope that something will happen, either buy or sell position, or if you want to make a trade, if you are if you have fat finger, then you might pull a trigger now, but you need to, you know that the stop loss for this trade is 18.05, so it's like big stop loss from this point, and I don't think it justifies risk to reward. But as I say, it can either retrace or go straight up from this point. Let's see. I think there could be a retrace because of US holiday, and Asian traders will join a little bit later. Okay, so let's see. GBP dollar. What about GBP dollar? Again, it's in uptrend here, and 1.2905 is buy, 1.2870 is stop, 1.2980 is TP. So buy position could kick soon, but still sell trade can happen around 30.30, 30.70 stop, 29.50. Now I will open a GBP dollar chart cable, and you will see why we have a chance to trade this possibly from 29 zeros here. Okay, so you see here it's okay, I will do it like this. Okay, you see there is a trend line here. Okay, and also we have inverted head and shoulders pattern that spans from this spot towards this spot. You don't see, sorry guys. Now you should be able to see the screen. Mike, Tibor, Sorin, now you can see the screen, right? Richard is saying that his screen is not shown. Now you should be able to see the screen. Yeah, I mean, just leave it a couple of moments and you should be able to see the screen. So you see, guys, now we have leaned head and shoulders. This is leaned head and shoulders. And this is left. This is head. And this is right shoulder. But if the pair gets here, we can also see historical buyers from this spot. And also it marks a shoulder, the bottom of the right shoulder. So WL3, daily L4, trend line, and probably Fibonacci, everything shows confluence. Now if you pull Fibonacci from this spot to this spot, you will see this is 38.2. If we get Fibonacci from this spot towards this spot, you see a double confluence here. Remember, guys, when you see double confluence, that means that it's stronger. The zone is stronger. So we have 38.2, 61.8, WL3 from this swing and this swing, trend line, leaned head and shoulders, a lot of confluence. Whatever, you know, guys, I mean, whoever, and I hope that majority of you visited my price action trading school, you know that everything that happens on the chart, whatever is technically valid, can give us the confluence. The better the spot, the bigger the confluence is, the better the spot is for buying or selling. So this is our zone. 29.10, 29.00, 29.05, even 29.95. That is a spot to buy. I think the pair will go up, of course, because of US holiday. Markets are thin. They're not trading its full capacity. So I think that if we see some spike, well, I think the spike could at least give us 30 to 40 pips on rejection. So we will see. Of course, we have also cash rate announcement. So it's a big risk event to Australian dollar. I personally think that this is technical setup, but because of cash rate announcement, you need to be well aware of the fact that this market can go both ways. So I advise you to be very careful if you want to trade the Australian dollar, simply because of the cash rate announcement. Now, if we take a look at technical perspective, we can see some range bound market. The thing that I don't like is the megaphone broadening top pattern. This is broadening top or megaphone, and this is my least favorite pattern. This pattern I don't like because it's very, very hard to trade. The price can be extended to the both sides of the market. Effectively, guys, if you take a look at this megaphone here, you can see that it projects from WH4 towards WAL5. This is the major range. So, you know, it's not very, very good to trade this particular market. I mean, it's hard to trade because you can place a pending order here and pending order there. But will it happen? I mean, the range is only 67 pips. The only way to how I can trade this pattern is to put limit orders. But then again, technical perspective tells me that Australian dollar is in uptrend. And if you take a little bit, just small second look to this chart, you will see that the price is making higher highs and higher lows, especially higher lows. So if you make these trend lines, if you put trend lines like this, you can still see some sort of uptrend, right? It is going up. 4-hour chart is also up from this spot and from this spot. So it's uptrend. 79.20 could be a buying spot. Because again, if we take a look at and we neglect this broadening top or megaphone, we have a confluence here. You see, historical buyers, also buyers here, and here you see also as a form of contracting triangle. But because we see this flagpole here, okay, this is a flagpole, this might constitute also for a pennant. So this is bullish. Everything is bullish here, right? Yeah, I mean, cup with handle, not perfect cup with handle. This is cup with handle here. But for me, this is more valid. This is bullish pennant. Flagpole with, or pole with contracting triangle. This is basically pennant, right? So what it can happen is that the market simply breaks towards upside, or if it breaks the lower part, it should retrace towards the POC. So it's a big risk because of cash rate announcement. But still, just for technical purposes, 79.20 is a buy position, 78.90 is a stop loss, 80.50 is TP. Also, sell is 80.50, stop loss is 80.80, and TP is 79.80. Here you can see 80.50. It's an overshot from WH4. And when you open, we need to open weekly chart. watch this. 80.40, 80.50. This is order block. You see? This is order block, previous high. It's a swing point on weekly. So that is why I think H1 can be broken to the downside, then it can proceed to the upside. Or if it breaks and closes above the pennant, it could be a continuation to the upside. So pay attention. And of course, this is the major news, so it will be a risky trade. Dollar CAD is in downtrend. 24.80 is sell position. 25.20 is stop. 24.00 is TP. Possible alternative buy 23.40. Stop 23.10. TP 24.00. So sell position 28.40. Dollar CAD. Let me find it. Should be here. Yeah, it should be somewhere here. Yeah. So see on the chart, this is downtrend, guys. And this is a big downtrend. So what I want is to sell on rally. Okay, and if we take a closer look at chart, we can see that the price already broke through this order block. So it needs to retrace. 24.80 is retracement. You see it's here in between 38 and 50. But it corresponds to EMA 89, WH3, projection high, and it's in between 38.2 and 50. So I would also say that 24.80, 85 is good spot to sell. 50% retracement, daily H3, weekly H3, ATR projection. So let's see, but I think this could be a good selling spot. 23.40 could be a buy because this is projection low, and also let's see weekly. Here you can see that we have historical buyers from this spot. 23.40. Here you see a lot of buying on weekly chart. So 1 hour chart has a confluence, and this is that confluence. Daily L3 a little bit higher towards previous retracement, ATR pivot, and weekly retracement spot. Yes, Agnes is saying that 24.40 is interesting selling spot because of order block and Fibonacci confluence. Indeed, 24.40, guys, this is order block. If you don't know what order block is, by standard definition, order block is the low of bullish candle prior to move down. But for me, this is the most important swing point that happened in the past, and this was the most important swing point that happened in near-term past. You see? Order block. And price could reject also from here. But for me, I would maybe wait 28.85. So guys, please pay attention. It could reject from 24.40 because this is also swing. And if you place Fibonacci, you will probably see a confluence. But because I like to see some bigger retracement, you see it's close to 61.8. But because I like to see a bigger retracement, I would say maybe wait for bigger retracement. But also pay attention to 24.40, at least for scalp trades. Because I think the scalp trades could be successful around 24.40. Simply because of the order block and because you can see that there were some sellers in near-term history here. And this is the slide for dollar CAD. So you see, I still think that the price could reject from these two important points. Very, very, very important, guys. Okay? Now, Euro-Yen. We have also two possible positions. Sell position, 130.95. Stop, 131.45. TP, 129.95. Alternative buy, 129.50. Stop, 129.15. TP, 130.00. So guys, two possible sell spots, two possible trading spots, sell and buy. Euro-Yen, I would like that it happens during Asia session, and I will be possibly trading it. And here, guys, this is, you see, 1 hour. This trend line has been broken. A lot of traders ask me, Nenad, how can you spot that the trend has changed? There are two ways how to spot. I don't use indicators personally because I either use multiple time frame analysis or I use trend line break. So this pair generally shows uptrend, right? But you know, guys, when you see a trend line break, usually then another trend line needs to reject in order for uptrend to continue. Here at this spot, we only have these two lines. And starting from this spot, we have a change of trend. Also, guys, this is high, this is low. This is lower high, this is lower low. Lower high, lower low. Price already started to make lower highs and lower lows. So this looks like uptrend, but because of this trend line, it's been broken. Guys, also this M, it tells me that the trend has changed to downtrend. So I will sell. Watch this. 130.90. Order block, M pattern, daily H4, also here, ATR pivot point, and let's see if we have a Fibonacci here. We can use this retracement because this is when trend line has been broken. Watch this, 61.8. Yeah, GBP dollar is approaching the POC zone, so we might see a buy set up soon indeed. There was some stop grabber happening now, guys. Yes, you really need to pay attention when you trade to these nice patterns that can show up easily on charts, guys. And now you can see also on my trading screen, I have a sell position on pound yen. You see, this is what I was talking about. Trend line has been broken. I waited for a retrace. I entered the market. So you can see my live trading here on pound yen. You see, might do some scalping on this sell stop, but I will be averaging my trade. So guys, watch here. I mean, you see, I trade everything that market throws at me. So GBP dollar, you see, it's getting close to this spot. So 29.05, 29.00. Here, this could be very, very, very interesting, okay, to go long. I am waiting for this. So I will probably put my market order long when the price gets here, okay? So yeah, I will flip the charts and slides, no problem. You don't see my euro yen trade. Here is my euro yen trade, guys. You see, This was trend line. Trend line has been broken. This is my Camarilla MACD. So here you can see the price retraced. Okay, a lot of confluence, double fib confluence, Fibonacci fan, Fibonacci standard target. Also, I use IPs from that I also showed you, 1469 retracements, and you see how the price, listen to me, so it's a bit, you know, it's now it's a little bit in oversold zone, so it could, but you see it's a bit. I think that it will break 141.50 to the downside, possibly targeting this zone. Okay, so you see, guys, this was pound dollar. Now it's dropping. It could reject from this spot, so pay attention. This is very close to zone. Okay, so pay attention, guys. Pay close attention. Okay. Now the question, we missed you last week. Happy to see you again. Yeah, okay, thank you. I will reply to you, but I still have, I think I still have one more slide. No, we don't have any more slides. So these are setups, guys. Okay, I will roll slides again, then you will be able to ask me whatever you want to know about some other pairs or whatever. So we still have some time, and I still have some time to answer your questions. So you see, euro dollar, pound dollar, Australian dollar, and be warned, cash rate announcement, dollar CAD, and euro yen. Now, okay, now the question, Marco, why don't you take a lower TP if it's downtrend? Euro yen. Okay, euro yen is still, you see here, euro yen, because I have 100 pip of target, and I think that, you see, the ATR is 100 exactly. So this is full ATR projection. So I am very careful because this is daily L4. Daily L4 is also strong support. So if the price rejects from this spot, it will make 100 pips, that is ATR, towards this spot. I don't think it will go straight away. And still we have 1 to 2 days to hold the price, because on Wednesday I changed setups. That is live trading webinar. As you know, when you trade 1 hour chart, trade can last for a day or for 2 days, right? So that is the reason. Tanel is asking, is the new Camarilla pivot point indicator available? Tanel, please send an email to me and I will reply. Now the question about dollar yen. Guys, dollar yen now is in uptrend. The only thing is this trend line has been broken. So because yen is getting stronger now due to risk on, I think that even euro yen could be sold. Okay, this could be a trend change just because of risk on. When there is risk on, yen is getting stronger. It means dollar down, yen up. So here, this is big range, master range. So I think that Fibonacci should be put from this spot to this spot. Now we have a contraction here. And regarding zones, we don't have a clear Camarilla, but we have order block. So you see WH3 is far from this spot. This is WL3. That is why the price is going up. So I think that it could possibly reject here. If this gap is closed or here, it should reject. 110, 110.20, it should go down. Gold goes up usually, indeed, and that is seen on the chart. You see what gold did during risk on. Guys, yen is the best currency to measure the risk. You need to know that. Okay, so yen is the best currency to measure the risk. When yen is going up, euro dollar could go up, but only if dollar is defensive as it is now. That happens because of risk flows into yen. Yen is risk on. Gold is also up due to risk on sentiment. And dollar yen is down. Dollar and gold are counter correlated. Okay? Remember, Bretton Woods agreement when US dropped gold. So US dollar and gold are counter correlated, negatively correlated. Dollar yen down, gold up. Yen up, risk on sentiment. Commodities also go up. That is basic fundamental language. Now how I'm speaking to you. Basic fundamentals, guys. And I always repeat it. Mirko, a good question. What about Swiss? Swiss is also a gauge for risk on, risk off. I will show you now. Just regarding gold, guys, this is head and shoulders. You see? Watch this. This is head and shoulders. Mini head and shoulders at the top. So this can turn to be a rooftop. What I would do here, guys, I would put a trigger happy trade. A trigger happy trade if it breaks down. A clear trigger happy trade. But please watch it, because if it happens during non-market hours, non-tradable hours, I won't trade it, definitely, okay? So this is possible. Spike down, then dollar yen could go up towards our retracement points here, somewhere here, 110 to 110.20. This could be a zone for a sell trade. About Swissy, as you know, Euro Swissy is, I will show you now, not dollar Swissy because it's counterpart to Euro dollar, but rather Euro Swissy. Euro Swissy here. You see what happens. Euro Swissy, Euro down, Swissy up, because Swissy is also a risk on or risk currency. Now we have risk on sentiment, and it usually gives boost to Swissy. So Euro down, Swissy up. Euro, Swissy down, right? So you see, it's getting rejected, and it will depend a lot from overall risk sentiment in the market. Pragbar is asking to reply the question. Let's see. Let's see the question. NFP is negative, but pairs are moved opposite to it. What is the main reason? No, NFP and average hourly earnings were not negative. They were negative, but not for euro dollar. You see, euro dollar was up. Guys, I'm telling you, you need to watch the overall picture. There is a risk on sentiment, and NFP was bad. So really, what did you expect to happen today? The only possible trade that I personally expected was euro dollar long setup. So everything goes according to the plan. Everything, guys. Okay? This spike down on Friday. You always need to remember, now and forever, Friday is day to take profits. Investors take profits on Friday, guys. Okay? That is why euro dollar dropped on Friday. And now it's moving in correct direction. This is what I would also do. I would always say go long. And I said it on my analysis today. So this is perfectly fine. It's not moving in the opposite direction. It's moving in the right way. Egels is saying it was spiked down because of ECB rumors. It doesn't matter, guys. Rumors or not, Friday is day to take profits. So investors probably, because of US holiday, they took profits here, and you see they took profits here from this spot. Just watch where they took profits. Watch this. What is this, guys? Head and shoulders and order block here. You see? Now the price is moving in a right way. Eric is asking in GBP dollar typo for long position. Why it's typo? Yes, it's no, it's okay. 29.05. It's not typo. 29.05 from this spot. And you see it was already in the zone. So this was a long setup trigger during our webinar. Okay, because the price went to 29.10. So yeah, this is POC zone. 28.70 is stop below this spot, below this trend line, and 28.90. But please be aware that now we are end of trading day, so protect your profits. I will roll slides again, guys, and expect new analysis soon. Okay, and live trading webinar is on Wednesday. And final question is from Idris. How about Nikkei? Yes, I will take a look. Before that, I will roll slides once more. Okay, GBP New Zealand, yes. Okay, two more questions. Australian dollar here. Dollar CAD here. And Euro Yen. Thank you, guys. A lot of nice comments here I'm seeing at this spot. How about Nikkei? Here is Nikkei, guys. One of my favorite equities. Here, Japanese 225. This is Nikkei index. You have a big gap here. And you see this is inverted head and shoulders. What can happen is that the price proceeds with uptrend. Okay? It can happen that it's either rejected from this spot or it proceeds up. Because if it breaks this spot, it should proceed to WH3 19861. This is the target if it breaks this spot. Then it might actually reject here. Because you see there is a big gap. So we need to see. Possibly this could go more to the upside towards gap close. If it breaks this trend line, guys, and if it breaks this spot, you should sell this. Okay, this is important spot here. Watch this. You should sell this. And finally, the beast or GBP New Zealand. This is the GBP New Zealand. A very strong uptrend. You see, very strong uptrend, guys. It could also bring a spike to GBP dollar. And GBP dollar is already rejecting from the POC zone from 10 for 5 or to 8 pips. I think that this could go up. Okay, this looks like uptrend. And you see it's WL3. And also this is order block. So buying on dips is the way to go with GBP New Zealand. Euro GBP, inverted head and shoulders here. Very strong inverted head and shoulders. The price is going still to the upside. But if GBP dollars takes its supremacy over euro, so if GBP dollar starts to go up, I think that Euro GBP will drop. So this is a trend line that you should be paying attention to. You have this trend line. You have also this trend line here. Okay. And you have order block here. Okay. Double tops and bottoms are always order blocks like this. So this could reject actually. Okay. And that could spike the GBP dollar to the upside. Ilya. The last question. Will you go to summer holidays or you already were? Yes, Ilya. I already finished my holidays. It was great. Yes, I had excellent holiday. I did a couple of trades, made some small money, 250 euros. But, you know, it was like I was enjoying sun bathing, shopping, and I did some few trades just for the sake of trading. So it was great. Now I'm back full in business. Expect new analysis soon. Uh, expect also new coverage, new live trading webinars, cryptocurrencies coverage. Everything that market can offer us will be there to cover it. Trade with me, trade with Admiral Markets. We are here to help you guys. Thank you. Wish you a great day. Wish you a great setups. Let's see what will happen. Cheers, everyone. Trade safe.